Assalamualaikum and a very good day to our lecturer, Sir Muhammad Shazwan Karim. Today, our group would like to do a presentation regarding our online group project on MAF603 Corporate Finance. Before we proceed, I would like to introduce our team members first. So my name is Muhammad Karaman bin Abdul Rahman. Our second member is Akmal Ikhwan bin Abdul Jalil. Our third member is Muhammad Zuhilmi bin Muhammad Fauzi. Our fourth member is Muhammad Ilmam Hasif bin Rafi. And our fifth member is Arif Hakimi bin Ahmad Qusairi. So we proceed with the first question. Haq Berhad has no debt outstanding and a total market value of 150,000. The earnings before interest and taxes, or EBIT, are projected to be 14,000 if the economic conditions are normal. If there is a strong expansion in the economy, then the EBIT will be 30% higher. If there is a recession, the EBIT will be 60% lower. Haq Berhad is considering a 60,000 ringgit debt issue with a 5% interest rate, and then the proceed will be used to repurchase the shares of stocks. There are currently 2,500 shares outstanding, and we need to ignore taxes for this problem. So for the required question, we need to calculate the first one. We need to calculate the earnings per share, or EPS, under each of the three economic scenarios before any debt is issued, and then we also need to calculate the percentage changes in EPS when the economy expands or enters a recession. So in order to determine EPS, we need to use the formula earnings after interest divided by the number of shares. Under these three economic conditions, there are no interest since the company has no debt. So we can just use EBIT to use it as a value on earnings after interest and taxes. So the first one, in recession condition, the earnings after interest will be 5,600. For normal condition, it will be 14,000, and then for the expansion condition, it will be 18,200. So the company has currently have 2,500 shares outstanding. So we can straight calculate the EPS for each of the condition. It will give us for the recession condition, it will be 2 ringgit and 24 cent. For normal condition, it will be 5 ringgit and 60 cent, and for expansion, it will be 7 ringgit and 28 cent. So the next requirement, we need to calculate the percentage of changes in EPS when we entered recession and expansion condition. So currently, the company have 2,500 shares outstanding. We have the equity and the assets total of 150,000 each. So the first one, if we entered the recession condition, the percentage changes in EPS will be 2 ringgit and 24 cent divided by 5 ringgit and 60 cent times 100%. It will be 40%. This shows that the EPS is being reduced by 60% if we entered the recession condition. And then for the economic expansion condition, the changes in EPS will be 7 ringgit and 28 cent divided by 5 ringgit and 60 cent times by 100%. It will be 130%. This shows that the EPS have been increased by 30% if we enter the expansion condition. That's all from me. Thank you.
Okay, now we move on to the next question. B. Repeat part A, assuming that Haq Berhad goes through with recapitalization, and discuss the impact of the recapitalization on its earning per share (EPS), and the issue should be considered for the recapitalization decision. Now, for the answer, we will divide to three, which is recession, normal, and expansion. First, for EBIT, for the recession, for the normal we get 14,000, which is stated in the question, and for the recession is 5,600, which is 60% lower than the normal, and for the expansion is 18,200, which is 30% higher than the normal. Next, interest. For interest, 5% interest rate times with 60,000 debt issue. So we will get 3,000. Next, EAI. For the recession, we get 2,600. For the normal, we get 11,000. And lastly, for the expansion, 15,200. Now for the EPS, the formula is EAI divided by number of share. So for the number of share is 1,500, and we will show the working at the next slide. And now for the EPS, for the recession is 1.73, for the normal 7.33, and expansion is 10.13. So if a company has 2,500 outstanding share and a market value of 150,000, then one share stock is RM60 ringgit, which is 150,000 divided by 2,500 share. So Hok Berhad will be purchasing back 1,000 share, which is RM60,000 divided by RM60. If that worth RM60,000 is raised to retire stock, therefore there will be 1,500 share outstanding, which is 2,500 minus with 1,000 for the following capitalization. So for the total equity, 150,000 minus 60,000, we will get 90,000, and for the total asset is 150,000. Now for the current share outstanding is 1,500, which is we just calculate just now. And for the percent change in EPS when the economy enters a recession, so it is equal to 1.04 divided by 4.4 times 100, we get 24%. So hence the EPS reduced by 76%. Next, for the percent change in EPS when the stock economy expands, equal to 6.08 divided by 4.4 times 100%, so we will get 138%. Hence the EPS is increased by 38%. Next, the impact of the recapitalization on its earning per share EPS will be lower if Hok Berhad took the debt of 60,000, since there is an interest for the debt which is 5% equal to 3,000. So the higher the ROE, the better a company is at converting its equity financing into profit. So Hok Berhad should choose the recapitalization since the ROA and ROE is higher. So that's all from me. Thank you very much.
Okay, next is question 2. The Kerem company and the Peachy company are identical in every respect except that Kerem is not levered. The market value of Peachy company 6% bond is RM1 million. Financial information for the two firms appeared here. All earnings stream are perpetuated. Neither firm pay tax. Both firms distribute all earnings available to common stockholder immediately. Projected operation income, Kerem has 300,000 and Peachy have 300,000. The year-end interest on debt, Kerem nil and Peachy have 60,000. The market value of stock is for Kerem is 2.4 million and for Peachy is 1.714 million. The market value of debt for Peachy is 1 million. Okay, the requirement A. An investor who can borrow at 6% a year wishes to purchase 5% of Peachy equities. Can he increase his dollar return by purchasing 5% of Kerem equity if he borrows so that the initial net cost of the two strategies are the same? For the solution is to determine the best alternative, we need to make sure the initial net cost is the same so that we can compare the return from each option. The initial net cost for Peachy is 1.714 million. We times by 5% and we get 85,700. For the initial net cost for Kerem is 2.4 million times by 5% and we get 120,000. Since we need the initial net cost to be the same, the difference between Kerem and Peachy will be the amount that investor need to borrow, which is 34,300. How to get that is 120 minus 120,000 minus by 85,700. A company needs to distribute the dividend before setting off any interest against retained earning. So the net earning that would be distributed to shareholder would be PC 300,000 minus 60,000 divide times by 5%, and we get 12,000. For Kerem is 300 minus 0 and times by 5%, and we get 15,000. So if the initial net cost is the same, the investor will increase his return if he wishes to purchase 5% of equity in Kerem. However, since there is a borrowing 34,300 from the investor to invest in Kerem, he will be charged with 6% interest, resulting in a net amount of 12,942. 50,000 minus 2,058 ringgit.
Next is question 2b. Given the two investment strategies in A, advise which will investors choose between the two alternatives. Discuss the factors that may influence the investor's choice. The solution for question 2b is the investor should choose to purchase 5% equity in Quorum because the company's return is higher than Pinchy. This will result in more money being received by investor. Factors that influence the investor's choice are: first is initial net cost. The initial net cost between Quorum and Pinchy are the same. However, Quorum will produce higher value of return to the investor. The second one is the finance cost. The rate may vary that would make changes between the two options, hence making the choice less worthy.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh and a very good morning. My name is Muhammad Imahasib bin Rafi'i, and today I'll present about the question 3. So the question 3, it said, new wave of the COVID-19 outbreak in major parts of the world may have sparked fears of a double deep recession. But Trademark Auto Berhad, the official distributor of Mazda cars and spare part in Malaysia, remains optimistic that the global economic growth is on track. Due to that, the Trademark Auto Berhad is considering 3 possible financing arrangements to raise 100 million of new capital for its business. So the alternative 1, finance using new equity. Alternative 2, finance using 50% debt and 50% equity. And the alternative 3, finance using only new debt. The proceeds may be utilized to finance working capital requirements, investments, acquisition, capital expenditure, and general corporate purposes. Currently, the capital structure consists of no debt and 250 million in equity. There are 100 million shares of common stock currently outstanding, selling at 2.50 ringgit per share. The expected earning of 200 million before interest and taxes are expected for the next period. The interest rate on any debt obtained should be 10%, and the corporate tax rate is 25%. So required, calculate the earning per share EPS for each alternative. So for alternative 1, in order to calculate the EPS, we need to find the EAI, where the formula of EAI is EBIT minus interest. So we have no interest here, so we get 200 million. So in order to get the EPS, EAI divided by number of shares outstanding times with 1 minus corporate tax. So the EAI 200 million divided by 140 million times with 1 minus 0.25 of corporate tax rate, and we got 1 ringgit and 7 cents. The alternative 2, the debt of 100 million times with 50%, so we get the 50 million.
So solution for alternative 2, 50% debt and 50% equity. So first of all, debt 100 million, we need to time with 50% and we will get the 50 million. So to get the answer, the EAI 200 million, we should minus with 50 million of debt, time with 10% of interest rate. And finally, we'll get 195 million. So in order to get the EPS, the EAI 195 million, divide by 120 million, the number of share outstanding, and time with 1 minus 0.25, the corporate tax rate. So the price for the EPS, we will get 1 ringgit and 22 cents. And finally, the alternative 3. So first of all, we need to find the EAI. So we use the 200 million minus 100 million of debt and times with 10% of the interest rate, and we will get the 190 million. So to find the EPS, we should use the EAI. We get 190 million divide by 100 million of number of shares of outstanding and time with 1 minus 0.25, and we will get the 1 ringgit and 43 cents. I think that's all for my presentation. Thank you.
Next is question 3B. Determine the distribution of income between debt holders, shareholders, and the government for each alternative. Next, I will present to you the answer for question 3B. So for the first alternative, we have the EBIT of 200 million minus the interest of 0 because they have no debt. Then we will get the EAI of 200 million. Then we'll minus the taxation of 50 million, which comes from 0.25 times by 200 million. Then we will have the EAT of 150 million. Then we will distribute to debt holders only, which they will get 150 million, and government will get 50 million through taxation. Next, we go to alternative number 2. The EBIT is 200 million minus the interest of 5 million, which comes from 10% times by 50 million. Then we will have the EAI of 195 million. Then we'll minus the taxation of 48.75 million, which comes from 0.25 times by 195 million. Then we will have the EAT of 146.25 million. And then we will distribute to debt holders and shareholders by 50% each, which they will get 73.125 million each to debt holders and shareholders, and the government will receive 48.75 million through taxation. And then lastly, the alternative number 3, we have EBIT of 200 million minus the interest of 10 million, which we will get from 10% times by 100 million. Then we will have the EAI of 190 million, and then we'll minus the taxation of 47.5 million, which comes from 0.25 times by 190 million. Then we will have the EAT of 142.5 million. And then we'll distribute to debt holders by 142.5 million minus by 57 million, and then we will get 85.5 million for debt holders, and for the shareholders, 100 million divided by 250 million times by 142.5 million, then we will get 57 million for the shareholders. And finally, for the government, they will get 47.5 million through taxation. That is all from us. Thank you very much.